SoFi Technologies. So this stock closed in 24 plus here today. Stock's up a shocking 240% in the past year. Like this stock, you can't even call it red hot. It's burning hot. It's like a blue flame. That's what I would call it in regards to SoFi. It's like a blue flame stock. Insane the momentum the stock is seeing, right? Now, here's the thing you got to understand, okay? When you look at, let's say, the public count, I have 5,000 shares of SoFi, sitting on 191% gain, sitting on $79,000 of gains, okay? Listen, basically all those gains have come in the past year. The past year. So this is still early in regards to the move for SoFi. Like when you're talking about great growth stocks, they don't make a 1 year move. They usually make 3 to 5 year moves at a particular time. And then they take a breather or they go through some sort of short-term crash, something like that. This stock's only really been red hot like this, well, not red hot, blue hot like this for a year. And so once again, usually great growth companies put together several years of a major stock price move. For instance, if you look at Palantir, which I'm up 2,272% on, right? That's a several year move. Palantir bottomed Q4 2022 and started to head up from there, right? And Palantir bottomed, it was like, oh gosh, Palantir, I think it was $5 or $6 at the bottom, right? Then it showed momentum and made a big run to 20. Then it made a big run up to the kind of the $50 level, right? From there, it made a big run up to the $80 to $100 level. And from there, it made a big run all the way up to 180 plus where it topped at recently, right? That's a several year move. That's what great growth companies do. So if you think SoFi is in the early innings of a major growth cycle, we still probably got another year, if not 2 years, of SoFi stock price momentum before we'll have a major slowdown and then potentially a crash in the stock. Then that's just natural what happens, right? Like maybe SoFi runs to $60, right? And then has a crash down to 40. It's not crazy to imagine. Like this happens all the time with great growth stocks, right? Now, in regards to SoFi here, right, the thing you got to understand, betting on SoFi is like trying to bet on the next JP Morgan, right? Where if you think about how dominant JP Morgan is in the marketplace, how big that company is, people are fully convinced that SoFi has an opportunity to be the next JP Morgan for the next, 10, 20 years. And when I look at SoFi, I'm like, it has a lot of the ingredients and it has the sort of growth rates that if you run these numbers out, you're like, oh my gosh, like if we talk about it 10 years from now, like SoFi could be a banking giant, right? Now they got to get through the next recession or two that we will have those do happen. And when you run any sort of banking related company, right, which this SoFi is more than a bank, it's fintech, right? But when you run any company in the financial space, the biggest thing when it comes to a recession, get through the other side with a good balance sheet and you'll be able to capitalize on the next economic cycle in a major way, right? And so a bet on somebody like a SoFi is like betting on Amazon 20 years ago, where you could have bet on Walmart, right? Walmart is like JP Morgan, like it's a dominant company, going to continue to be relevant for decades to go in the future, right? Going to continue to be a giant. But there's this other company that, is pretty darn exciting and is going to put up extraordinary growth rates that are going to completely dominate the other company in regards to growth rates, right? And so that's my opinion on betting on SoFi versus betting on JP Morgan. JP Morgan's like betting on Walmart 20 years ago. There's nothing wrong with that. Great company, great business model, going to continue to be relevant for decades to go in the future. But SoFi's an Amazon-like opportunity, right? And that brings me to the next point around SoFi. You got to understand there's some stock. You guys ever seen the movie Limitless with Bradley Cooper and Robert De Niro? You ever seen that movie before, right? And he has this limitless pill and it like allows his brain to like think so much differently than everybody else, and essentially like he's like a higher, almost becomes like a higher being, like a higher life form, because his brain just is operating at such an advanced level, right? There's some stocks that are like that limitless pill, okay, where they're I would call it like it's probably 0.1% of stocks, or maybe even 0.01% of stocks have this ability essentially to, they're not judged by the traditional things you judge companies by. Traditionally, you're going to judge companies by P ratios and forward P ratios and price to sales ratios. And like that's what it is for 99.9% of stocks. And that's why I teach you all that stuff that matters, right? Running projections. But there's like 0.01% of stocks or 0.1% of stocks that basically are limitless. These stocks do not run by the traditional fundamentals. They run by the future. Stocks like Tesla come to mind. Like Tesla's entire public life, since that company went public back in, what was that, 2010, 2011, company's always been a limitless stock. It doesn't run off traditional PE ratios or forward PE ratios or price to sales ratios. None of that. For that stock, it just doesn't matter. People believe, it's a game-changing company that's going to be, nowadays they're talking about robots and self-driving cars and all these different things, right? If you look at Palantir, Palantir has been at a ridiculous valuation for quite some time. And even when that stock was $6, people said it should be $3. Palantir does not run by the traditional, usual things you would run a stock by, right? Amazon, up until really the past few years, was also one of those limitless stocks. Amazon never ran on traditional fundamentals of like a P ratio or forward P ratio, right? And so there's a certain amount of stocks that they're limitless. And I look at SoFi as one of those very rare stocks that it will never run on traditional P ratios, or I shouldn't say never. It won't run anytime soon on traditional P ratios or anything like that. Eventually, all companies will, in the end, be judged by P ratios and forward P ratios and price to sales ratios. That will happen in the end game for all stocks, including Tesla, including Palantir, including SoFi, including everybody, okay? But you can go through 10, 20 years where it just is irrelevant. People are buying that stock because you are the future. And that's the way SoFi is. SoFi will not anytime soon run on traditional metrics like a JP Morgan would be judged, or Bank of America or Wells Fargo. People will continue to buy up SoFi stock for a long time to go in the future. As long as they make it out of this to the other side in regards to recessions, keep putting up great growth rates, people will buy that stock continuously, regardless of valuation, regardless of anything, else, right? And here's the other part you're not considering, okay? Listen, people that are holders of the stock will continue to hold the stock regardless of the short-term trailing 12-month PE ratio and the forward PE ratio. They'll continue to hold the stock and not be interested in selling it because they're like, why would I sell the future? Why would I sell the next JP Morgan when they're not the next JP Morgan yet? So that's just something to kind of keep in mind there. And it's very few, man. It's very few stocks I can think of off the top of my head that are true limitless stocks. It's like 0.01% of stocks in the market, but they run different, and that's SoFi. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6 and 7 figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. Alrighty, first up here at UnitedHealth, UNH. So, listen. The big Buffett bought, right? From my understanding, David Tepper also bought UNH. That's really bullish for UNH in the respect of, anytime Warren Buffett buys a stock, usually it ends up pretty well. He does not bat 100%. No one in this game ever bats 100%. David Tepper, seen as one of the best investors ever, legendary investor, right? Legendary hedge fund manager. David Tepper, people will look at David Tepper and they would say, like, if he's getting involved in something, it's probably going to go very well, right? But he doesn't bat 100%, as no one does. And additionally, from my understanding, Michael Burry is playing UNH as well through some different avenues. Okay, so here's the deal. You got a lot of big dogs in UNH. That could put a short-term bottom on this stock, right? Given all those big dogs being invested, people are going to look at those and say, these guys are going to hold it likely for at least a few quarters, if not years. Buffett's case, probably years, right? And they'll look at that as good. No. My thing in regards to UNH is, this is going to benefit the stock price in the short term, no doubt, but this does not guarantee the long-term results of UNH. I think that's important. Everybody understands this when it comes to stock. Like, UNH is a whole situation. We know the government's going after companies left and right. They're making backdoor deals with. It's a weird situation right now in regards to government, right? And we do know the government debt is completely out of control. We do know that, right? We do know UnitedHealth makes an absolute fortune of money, right? Some would say they make fortunes of money from the government in certain ways, right? Through government programs, things like that. So I think UNH is going to be a mess for years. With that being said, that doesn't mean there can't be money to be made in this stock over the next few years, right? Some people are going to trade it. Like somebody like Buffett. Buffett's probably buying because he probably wants to own this for the next, 10, 20 years. Some of these other guys like David Tepper could be out of, let's say the stock goes 350, I wouldn't be surprised if David Tepper got out, right? Michael Burry in his play, those guys might do something shorter term with UNH. Buffett's likely in this for the long haul, right? But this is going to be a messy situation. It reminds me a lot of Boeing. Boeing's been a mess now for 7 years. I don't know if UnitedHealth would be that messy for that long, but I think it's going to be a mess for a while. I don't see this being cleaned up fast, and it's just going to be problematic. But with that being said, it doesn't mean you can't make money in the stock. That's the most important thing I want to kind of stress here. Does it interest me? Absolutely not. Absolutely not. It might go 350, it might go 400, it might go 500 in the short term. Who knows? But I'm not interested in being in this company long term. And I don't do short term, I'm going to buy the stock because Buffett's buying, so it might go up over the next, 3 weeks. If other people want to do that, that's fine. I focus on what I focus on, and it goes pretty damn well. So we focus on that, where the big money's at. I'm, the rest of that speculating on, well, it might go up for the next few weeks because Buffett bought and David Tepper bought. I don't want to play in that game. And I don't want to be in that company long term, just given the mess that it's going to be there. And there's just a lot better opportunities, honestly, in the market that will significantly outperform over the next 5-10 years, in my personal opinion, right? Some people will look at HIM stock and they say HIM stock is a great stock that will outperform UNH, right? So this stock continues to get hit. It just seems like, it kind of can't get out of its way here in the short term. The stocks have been an absolute roller coaster ride this year. You look at the stock, it's mid-20s to enter the year. Shortly after that, it's $68. Shortly after that, it's 25. Shortly after that, it's 64. Then it's down to 41. Then it's up to 66. Now it's down to $45 after hours. It's all over the place. Okay, here's a deal in regards to HIMS. There's two big components of this. The first is supposedly FTC looking into HIMS, their practices, blah, blah, blah. That's been something that I believe has even plagued the company going back to 2024. So, that just is what it is. Are they going to find, HIMS did anything wrong? Who knows? Maybe, maybe not. You flip a coin in regards to that matter, right? If they're going to find they did anything illegal or something wrong. Okay, let's say they did do something wrong, then HIMS is probably going to get a fine. Could be tens of millions of dollars, could be $100 million, whatever. HIMS could probably weather that. That's just the cost of doing business. That is what it is, right? To me, actually, the more a little troubling thing was actually this. This came out actually on Tuesday. I believe it was after the bell, but I'm not 100% sure in regards to when this news hit. But HIMS shares traded lower following the telehealth firm's CEO, Andrew, disclosed the sale of more than $33 million worth of company stock. This transaction comes after the weight loss drug maker, which markets cheaper compounded versions of Novo Nordisk popular weight loss medicine Wegovy, witnessed a nearly twofold rise in value in a year. According to SEC filing, the CEO sold 660,000 shares of HIM stock last week for an average price of $50.58. The sales conducted over a series of transactions on Thursday had a total value of $33.4 million and reduced the CEO's stake by about 7%. Meanwhile, the chief medical officer of the company sold 60,000 shares of HIMS, shares worth nearly $3.2 million. A day earlier, its chief commercial officer had parted ways with 26.6 million of the company's shares, worth roughly $1.8 million. That's one of those things. It's, it would be, if HIMS didn't have all these kind of situations around it, it would be no problem. If they didn't have a potential, look in by the FTC or whatever's going on in regards to that matter, right? Which we're still trying to figure out details in regards to that. If it didn't have to deal with, the whole, can they sell this compounded thing or not? I think the sale wouldn't be that big of a deal. But since they have all these like question marks and potentially dark clouds here, and the stock's been a complete roller coaster ride this year, I think that's why people are looking at the sales and saying, what's going on here? Like, are you guys getting out because it's bad? You're not going to be able to sell certain products that are very popular and big money makers for him. That's the questions people are going to ask, right? And we don't know the answers to that. Like, no one knows the answers to that. Like, why does the CEO sell $33 million of stock? Could be many reasons. Maybe he wants to go buy a big mansion. Maybe he wants to diversify his wealth a little bit. Like, maybe there's something going wrong with the company and he's like, crap, I better get out of some shares now because we're going right back to the 20s. Like, there could be a million different things going on in regards to that. So to just, assume it's one thing or another, that's difficult because there's a lot of different reasons somebody sells stock, right? So maybe he wants to buy a fleet of Ferraris, right? Yeah, like, I don't know. Like, why is he selling $33 million worth of stock? Now, in regards to valuations of these companies, HIMSS obviously comes with the big valuation, right? Crazy, big premium here. Look at the forward P is likely 70s. If 2-year forward P even is close to 40. But HIMSS is supposed to have great double-digit growth for all the way throughout into the 2030s, supposedly, right? So if that's the case, then a 2-year forward P under 40, is HIMSS a decent buy? If HIMSS is truly at a 2-year forward P of under 40 right now, okay? And let's say they are able to grow revenues double digits a year all the way into the 2030s, then yes, HIMSS would be a buy today. Now there's question marks about that, big question marks, right? And that's fair. And we've got a lot that needs to be answered in regards to HIMSS over the next, I would say, 2 quarters here. Now, UNH, you look at that one and it looks like the best steel deal of the century, right? You look at the 2-year forward P, supposedly based upon what analysts are expecting here, forward P under 10, 8. Whenever you see under 10, you got to get suspicious. There's something fishy going on, right? And for UNH, everybody's expecting this massive bounce back in profitability and all those sorts of things, right? I just don't trust it. I don't trust it. Like, I think there's going to be a lot of changes made to their business model that are going to be negative, likely, right? And I think if there's a big short-term pop in the short term, I think there's going to be a lot of people that are kind of trading the stock, just looking to get it in and out, make some quick money here. And I just feel like the government's going to really crack down on them. And so for that reason, like, I just don't trust UNH at all, right? Once again, I wouldn't be surprised if the stock goes 300, 350, something like that, 400 even in the short term. But that one, I just don't trust it. How would you like access to all my best course curriculums? My Becoming Master of the Stock Market course, my Stock Market Investing Mastery course, my Stock Options Mastery course, my Millionaire Playbook. How would you like access to all my best courses, as well as the ability to have access to my 6- and 7-figure plus Discord community, where we're constantly keeping in touch with each other, talking about what's going on in the market? How would you like exclusive weekly videos from me? How would you like the ability to see what stocks I'm buying and selling in my $2 million plus Fidelity account? If that all sounds pretty interesting to you, apply to join my private group. That is going to be linked in the description area down there. You can click on that, fill out an application, and go ahead, hop on a call with Andre. Andre will walk you through the whole process. He'll walk you through the whole group, and you can go ahead and join us in there. Once again, the link for that is in the description area. So first off, when we look at the public count, we see what? We see a lot of success, a lot of great stocks, right? The Palantirs, Elves, Meta, SoFi, I mean, the gains are astonishing, right? $148,000, $109,000, $998,000, $75,000, $150,000, $20,000, $126,000, $68,000, right? That does not include all the insane profits I've taken in these stocks. Like, I've taken hundreds and hundreds and hundreds of $1,000s of profits in Palantir, taken massive profits in Meta. Tesla was like a 2,000% gainer, took ridiculous profits in Tesla over the years, right? It doesn't account for the dividends received, but there's sometimes we have a bad stock. And right now we have a stock that is performing poorly in the portfolio, and that is Honest, HNST. But the thing with Honest is, I'm down 20% in this position. This is a stock that I believe is going to perform tremendous over the next 2 or 3 years. When I look at the fundamentals of the company, they do not reflect what I'm seeing in the stock price of Honest, okay? So what I see with Honest's business model, I see a business model that The revenues have been trending higher and higher. The margins have been trending higher and higher. The gross margins just went over 40%. And if you compare that versus 2 or 3 years ago, they were in the mid-20s, folks. That's how much this company's revived its gross margins. We see a company that is now flipped over to that profitability side, right? We see their cash flows have built up immensely. And additionally, we see a company that has one of the strongest balance sheets you'll find of any company valued under a $500 million market cap in the entire stock market. Like, you look at that balance sheet, and it's insane, loaded with cash to the sky, and no debt on that balance sheet. It's incredible. And a business model that's needs based. Like the products they sell, beauty related products, cosmetics, diapers, wipes, all the products they sell, like, they're very needs based. And it doesn't matter if you're in good economic times, bad economic times, so economic times, like, their products are needs based, right? So when I look at Honest, I think this is one of those stocks that, yeah, we're down on it a lot right now, 20%. But I think when it's all said and done, we'll have a very nice profit on this. And I'm looking at this short-term time period we're going through right now as a time period I want to add more to my position as public account. And I would not mind adding to the position and maybe getting it to 20,000 or 25,000 shares in the public account here. When I look at Honest, I see a company in which it deserves to be in the public account nowadays. I think 2 or 3 years ago, you could make a strong argument that Honest didn't deserve to be in there because it was not a strong enough company. I think if you look at this company and you look at the numbers they've been posting and you look at the trend of everything across the board, I don't care, revenue, margins, profitability, whatever metric you want to look at, balance sheet, everything is trending in the right direction for this company. And so I think this is a company that deserves to be a decent sized position in public account. Do I want this to be $1 million position? No. Would I mind this to be $100,000 or $200,000 position in public account? I think that's where it deserves to be when I look at the fundamentals of this company and how well the management team. Remember, when you buy into a company, you're buying into a CEO, right? And the CEO of this company's turned his business around massively. Okay, so Honest. I got to speak up about this one. Like, I think it's a tremendous opportunity. I think people that are buying in the threes, I think they'll look back, a year from now or a few years from now and be very happy they were buying in the threes. Okay, we'll see. I could be wrong, and maybe the business model just gets worse over the next few years, and I just don't see that happening. The trend looks very positive for Honest. Okay, now next up here, we got to talk about a potential problem. Okay, with my new hedge, right? My new hedge that I spoke about last night on the main channel. Okay, here's the deal. If we look at the hedges I had on at the beginning of this year, they did tremendous for me. Walmart, Costco, and then what was the other hedge I made a bunch of money on early this year? Was it Tesla? No, I don't think it was Tesla. I think that was the year before. There was another hedge I made a bunch of money on. I think I even showed it in the main channel video last night, right? And, so we went 3 for 3 at the beginning of this year in regards to hedges. All 3 made tremendous gains on, right? But there was a hedge I had on toward the end of 23 and the beginning of 24. And I talked about this stock a lot at the very end of 23 and then going into the first half of 24. Okay. And it was Chipotle, CMG. And I spoke about the problems I saw coming in regards to Chipotle. I talked about the valuation. I talked about how, a lot of moves that Chipotle was making to make the quality worse, in my opinion, restaurant experience worse, was all going to come back to bite them. And eventually they were going to be hurt by this significantly, right? But the issue I had is my timing was not perfect in regards to Chipotle. Actually, when I was speaking about that at the end of 23 going into 24, the stock just kept going up and up and up and up and up. Kind of like when you go long a stock sometimes and you're like, this company is amazing. Like, I'm going to make so much money from the stock over the next 3-5 years. But when you first buy into it, it just keeps going down and down and down. And you're looking and you're like, oh my gosh, man, I just keep losing money on the stock. Like, and you go down 20-25% all of a sudden. But Chipotle was opposite. It just kept going up. But I ended up being right on Chipotle, right? My timing was not right? It just kept going up right in my face. But at the end of the day, like, you look at all the times I talked about Chipotle at the end of 23 and in that first half of 24, everything I said ended up coming true in regards to Chipotle. And we see it in its latest numbers. Things that are happening, like, no one saw this coming other than me. No one ever spoke about this and thought Chipotle could report restaurant sales decreasing 4%, comp restaurant sales. No one spoke about that. Everybody thought because Chipotle had just been reporting for the longest time, ever since they went through the E. coli disaster, right? They'd been reporting for the longest time, comp restaurant sales up, up, up. People did not think it was possible that their restaurant sales would decrease 4%. That's like crazy. Now people are like, oh, dang, it happened, right? Operating margins of the company decreasing. Their operating margins are going down for Chipotle, and not down by a small amount. It's actually down by 150 basis points. Operating margin went to 18.2%. That's a decrease from 19.7%. That's significant in the restaurant industry. Restaurant level operating margin was a 27.4%, came in at 27.4%. That's a decrease from 28.9%. Diluted EPS down for the company. Adjusted diluted earnings even decreased for the company. That's when you take out one-off things and all this stuff, right? And so, everything I said in regards to Chipotle came back to bite them, right? I talked about, how all the wages increases in California was going to hit them, right? It's clearly hit them, and it hit their profitability, hit their margins. They had to go up so much on their customers that their restaurant sales are now going down, right? And the quality went down, and it shows. And so, that could happen with my new hedge, where maybe I'm 100% right on what ends up happening with the company, the overvaluation, what I think is a peaking in regards to user numbers and things like that. But maybe at first it goes up, right? So far it's gone down, but maybe at first, maybe we look out 2-3 months from now and it's like, dang, my hedge is doing horrible. That's possible.